The Greater Toronto Area market heads into a bearish territory because we have above seasonal norm declines. Yeah, it's kind of weird right now. The sentiment has definitely shifted more to the buyer side. Feels like a buyer's market, not quite, but as I said before in spring when things were kind of crazy hot, it was just slightly above the seasonal norm. And right now, I actually think it's about the exact same thing, but on the other side with the current market right now, where we're below the seasonal norm with the latest stats. So the declines are normal during this period, especially during the dog days of summer. You know, you got your July and your August, especially next month of the real estate market in Toronto, but they are well below the seasonal norm. And I'll tell you how below they actually are. So stay tuned to find out. Now, if you're wondering how to navigate this real estate market and get ready for the fall, you could book a call with me. Use the link that's on the screen. It's right here. It's www.checkwithzen.com. Simply click on the date and a time that works best for you. And then when you see the prompt, fill in your name, email, mobile phone number, and the question you have for me, and then we'll chat then. Good day, Toronto. Welcome to another episode of Prime Properties TV. My name is Zen, and I run and operate a RE/MAX in the Greater Toronto Area on top of making awesome educational content just like this one for you. And if you find any of these videos I'm making for you helpful in your real estate journey, whether buying, selling, or investing, then make sure you spread the knowledge by smashing the like button and subscribing to the Prime Properties channel. So right now, the July numbers have come out. And if you read the headlines, depending on like which angle you kind of look at it, it's going to say, hey, look, things are actually kind of okay because we're comparing it to last year, which was like 20-year lows of everything. Or you're looking at a monthly number and it's like, hey, you know what? Numbers are down quite a bit right now and it looks like we're heading into a buyer's market. So where exactly are we? Well, I'm going to give you kind of my take on the latest numbers, right? So I'm going to put the latest numbers over here. And as you know, I'm generally going to go on a month-to-month basis. And, you know, they're bad, but they're like not that bad. Okay, so like kind of within the realm of what I was personally expecting. Prices, as you can see over here, definitely down month to month quite a bit, 5.39%. If that happened throughout the year, it's down quite a bit, which is, you know, like the market didn't really give up any of the gains from spring. So it's not like it dropped that much, but it is a pretty big drop month to month. Now, historically, prices have always gone down when you go from the month of June to July, with 1 month in exception, which was in 2021, like post-pandemic, in like a 27 or 28-year data set, right? So this is normal, right? And of those price change, the average drop is 3.65, right? So a decrease of 5.39 is definitely above the seasonal norm, or below, depending on which way you're looking at it, right? But like I said, even in the spring, it's just the seasonal norms this year are either above the normal or below the normal, and they're fluctuating quite a bit because it's quite volatile. So I'm going to apply that same kind of concept here. It's just below the seasonal norm. Now, as a reference, last year when we had the decrease from June to July after the 1% interest rate hike, the prices came down 6.24%, which is a lot more than right now, but more on that later. So you can see here, sales are down about 30% from last month, and like honestly quite low historically speaking. More on that a little bit later. And the new listings, surprisingly, it really even surprised me, are down, which may sound like it's actually a good thing as inventory, you know, isn't building up as we head into the fall market. But historically, June to July generally means listings stop. So this is kind of normal, right? It's not a lot more new listings than people thought, but the normal amount. Now, the positive in that is the new listing count is literally kind of, like I said earlier, where we should be historically. So there doesn't seem to be like panic selling right now, where there seems to be a rush of people trying to sell right now. Now, that's just like the whole aggregate of the market. But I can tell you, if I look into like listing for listing, yes, there's people who are desperate to sell. Now, active listings are up 9%, meaning inventory is building as we head into the summer months, right? So this is exactly why the months of inventory is now at 3, almost 3, right? It's up 55% from last month, meaning the amount of stuff that's coming to the market versus the amount of stuff selling is going towards a buyer's market, hence bearish. Now, this number is quite high for GTA. And, you know, you can see over here, the prices for across the board kind of all went down except for the 905 condos. No idea why. Now, all slightly declined more than the seasonal norm as well in all those numbers. But like I was saying earlier, nothing like overly alarming per se. Now here's a chart showing you kind of the month over month change we've had for like almost basically the last few years now to show you how volatile we are. So right now from June to July, we gave back about 6.5% of the price gains we caught in spring, which isn't even half of how much the price has gone up, right? So the world isn't falling. Are we going to have more price declines next month? 100%. It's very likely to happen. It's just now we have more inventory as we set up for the fall market since sales are very, very low right now. So on a year-over-year basis, prices are, up like a tiny smidgen, but I've been saying for a while, like if you're looking at the year-over-year number, it's irrelevant because the market is very volatile. And last year was like one of the worst years ever. But you can see that in this chart that declines are mirroring that of last year in July. So we're kind of trending toward that same line. And again, more on that a little bit later. So here's kind of like another chart that shows you the monthly change to give you an idea how bad things are. So historically, when we go from June to July, you can see that we do get an increased amount of active listings, meaning the amount of listings that are available to be bought at the end of the month. So historically, we would have shaved like 10% off the active listing stock, or like to call it the inventory count, right? But now we got a 10% increase instead of 10% decrease. So it went 10% the other way, meaning that's a 20% swing. This is exactly why the months of inventory is so high right now, relatively speaking, in the GTA. It's building up and it's probably going to go up next month as well. We're getting a normal amount of new listings. So very normal, but the number of them that actually are selling is very low, right? Now you can see in this chart here, sales are down, like I was saying, but we should be seeing a decrease of 13% again from June to July. But right now we're seeing a 30% decrease, so almost 3x. So the exact same reason why the month of inventory is at 3. That's the metric I monitor a lot. We're heading towards that kind of bearish buyer's territory. And here are the new listings. And as I was saying earlier, we're right on track of where we should be. So the market dynamic shift is clearly from a buyers not buying right now, as opposed to sellers panic selling. And again, there are going to be some, but the buyers are just taking a step back. And as I've said in previous videos, the last 2 rate hikes in the last 2 months shocked the buyers, and most of them are on the sidelines waiting for a little bit more clarity of what rates look like in September. Now, before I get into looking at the historic comparisons for you to see how bad we are this year, the magic question really everyone is asking me is this: what's next? Well, I can tell you, August is never really a good indicator for where fall goes because it is the slowest, well, second slowest month of the year, except for December. Forgot about Christmas. So I would say the numbers coming out of August usually is like nothing. It means nothing, right? Which leads us to the question, what will the fall market bring? Right? Well, the first thing everyone is watching for, like I was saying before, is whether the Bank of Canada is going to have a rate hike on the 6th of September. This is exactly after Labor Day, right? And that's really going to set the tone, the sentiment, and how buyers and sellers are going to be interacting in the fall market. Because if it doesn't go up, right, then maybe that's a pause and we feel a little bit better. But there's more on that I talked about last week or 2 weeks ago. Put the link up here. I said that there'd be probably like a 40% chance of a rate hike. And if there is a rate hike, I suspect the fall 2023 market will be much softer than the previous year, so fall 2022. But if there is a pause, I think it'll be more robust than the previous year of fall 2022, which, by the way, really wasn't a great year to compare. So it's still going to be bad, like historically speaking. So let me show you why. If we compare where we are right now this year in 2023 to last year in 2022, it's literally the exact same setup as we go into the fall market, right? If you look at this chart over here, on the left-hand side is the 2023 numbers. The right-hand side is the 2022 numbers. Remember, July 2022 was when we got that monster 100 bips. So 1 whole percent rate hike that nobody was expecting. We thought we're going to get something, but we get a big whopper one, right? So inventory really started to pile up. The months of inventory hovered around 3. Prices declined above the seasonal norm, as I was saying earlier, and almost exactly, like where we are right now. Interesting, right? Now, prices weren't too far off either. The only difference is that we got significantly more new listings last year around this time than we got this year, right? That's the only difference. And that's why I'm saying things are kind of averaging right now. Now, the sentiment at the time was like, oh, crap, trigger rates. Oh. And, all of this was coming to a lot of attention in the kind of Canadian zeitgeist and a lot of the media headlines reporting it, right? So everybody at that time thought, oh, crap, sellers are going to panic sell, flood the market with tons of inventory, and prices are going to come down. That was kind of like the sentiment. Guess what? Despite more rate hikes happening, not many people had to sell because negative amortization was just getting started, right? If you guys kind of remember that. And the market stayed flat for the rest of the year in 2022. No ups, no downs, despite another 50 basis point hike in October and then another 50 basis point hike in December. I don't think we're going to have that kind of rate hiking cycle at the backdrop of this year, right? So I personally do not think we're going to see that kind of interest rate hike, which is going to affect the sentiment as badly as it did last year, right? Because we got another 100 basis points before we got into the end of the fall 2023 market, right? So despite all of this and stickier inflation, I do think fall 2023 will be more robust than last year in fall 2022. But again, it's still not a great year, right? I personally suspect the entry freehold market and the entry kind of condo market is definitely going to get a lot of action and things will be moving as inventory is still kind of tight in that market right now. I still see some stuff selling in multiple offers if it's like positioned very well and it's like priced, relatively accordingly, right? So are the sellers going to like freak out and start listing all their properties and selling them? Maybe if we see a rate hike in September, right? But if they don't, I'm pretty sure they're not going to panic, right? Except for like the pre-con people. That's a totally different story. And as they don't panic, I suspect more buyers are going to be coming from the sidelines back into the market to start looking again, right? So similar to like last year, some nominal activity, nobody panic selling, right? Now let's look at the historic numbers. And you can see right now over here, the active listing is exactly in line with where the average should be, right? So despite inventory, meaning the number of stuff that's available for sale is building up, it's not like we have an abundance of supply where it's like fire selling, right? And as I said earlier, if we don't see that rate hike, I suspect we won't see as many panic sellers as there are right now. And again, I'm going to reiterate this. There are some panic sellers right now, right? And the bears are expecting some. I just don't think it's going to be enough to kind of swing the market really strongly into a buyer's market. And while over here, you can see that new listings are above the norm, it could cause the inventory to build up, but they're not that much higher, historically speaking, relative to the average, right? So I don't think we're getting that kind of panic increased amount of listings where sellers are like, oh my God, it's going to have to sell this right now, where prices do come down and there's price discovery that way, right? It's just not a significant enough amount right now to move the needle per se. And you can see here that despite the 2023 bar being kind of above the historic average, if you look at like the last 10-year average, which is a little bit more kind of a better indicator for us relative to the entire data set, because the 90s and the early 2000s, you can tell it's like really, really low. We're kind of in range in the last 10 years in terms of new listings. That's kind of why I'm not freaking out. And I think this is a little bit normal. And again, just a little bit below seasonal norms or above, however you look at it, but still within reason. And finally, sales are historically low. And if we didn't have a historic year, like historically bad year last year in 2022, this would also be another 20-year low in amount of sales, right? The bar was so low, it was set so low in 2022 that like we can't even use decade lows anymore because that's probably the lowest bar for a very, very long time. So while inventory is building in the summer months, like I said earlier, it's very, 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 very similar to what we saw last year. And I do not think that the sentiment currently right now in 2023 is as bad as it was last year. So I do think we should have like a little bit of a robust fall market, assuming no rate hike. Again, this is relative to last year, still bad on like historic norm, right? But if we do get one in September, like a rate hike, it'll be less robust, obviously, right? And that's kind of why I made that video last week about the Bank of Canada's probability of rate hike. Hopefully this gives you a better understanding of like what's happening in the real estate market right now, because a lot of people make you feel like the world's falling apart, but really it's not, right? It's just that we're a little bit below seasonal norm and everyone's kind of gearing up for the fall market and kind of what to expect, right? And I think it's gonna be similar to last year. So after watching this video, if you do have a unique situation, and I personally think everyone's situation is different, and you kind of want to chat about what to do and how to navigate this so that's best for you and your family, you could book a call with me. Use the link that's on the screen right here. It's www.chatwithzen.com. Until next time, your move, your future. See ya! Now that I'm done watching this video, I think you should check out this video. And you know what? Why don't you check out this video too?